Okay, I believe we're live. Good evening, everybody. Let me know in the chat about the state of our audio and video, and if that's good to go, then we will do so. Familiar faces as always. Richard, Peter, Gel, or I don't want to say Jelly. Jelly is wrong, it's Gel, isn't it? Dumbo, of course. Martin, I'm doing well. Hope everyone's had a good, productive weekend as well. As you may see by the screen, or not, I am indeed back at home. Thank you to my sister, shout out I guess, for her generosity over the last, 3 weeks of not having internet and not being able to trade at the battle station. It's just been a bit of a pain. So, we are back. We are back on home soil, so to speak. So that certainly makes things easier. Makes it easier to do content and all of this stuff, and most importantly, trade. So that's always good. With that said, let's get straight into it. First things first, thank you to Bybit for sponsoring Technical Roundup. Their link can be found in the description below and or in our newsletter, which is also freely available and comes out every Tuesday at 8 PM UTC. So Bybit really helps us out, make this show possible, so a big thank you to them, without assaulting you with ref links, no less. That's always an added bonus. And yeah, leave a like on the video and subscribe to the channel if you haven't already. The amount of YouTube videos that we watch, if your quantity and volume is anywhere close to mine, when you hear those words, it just kind of enters one ear and goes through the other, but it does help us out a lot, clicking all those YouTube algorithm buttons. So thank you very much for those of you who take the time. Yeah, Bitcoin bull, 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 that rap song. Let's not talk about it, but we will talk about Bitcoin. More Bitcoin, less music, I think is quite a safe formula for Monday. I think for those asking about the duck, some of you seem to forget two salient facts, which are as follows. Number one, Monday is my session, so you usually have me, unless something goes terribly wrong. Number two, the duck actually has a social life, so he's off meeting some... Actually, you know what? It doesn't even matter. He's out. Right. I think a cool way to do this, now that we've got some weekly closes, etc. to work with as well, we'll kind of just go through the chart without my levels. That's an exercise I recommend doing generally. Just from time to time, wipe whatever it is you're using and kind of zoom out and get a fresh perspective. It's important to derive your levels from the market, so to speak, as opposed to when you have just too much on the chart for too long. You kind of assume that the market is derived from your levels. That doesn't sound like it makes much sense, but believe me, there is some sort of tunnel vision risk if you always just have your levels or your reference point on the chart and you kind of stop looking at price and start only looking at price through the lens of your levels. So, you know, bit of something to explore there. So for Bitcoin, as we've discussed, there's really two things about the monthly time frame which I think have remained steadfast and equally important. The first is that the monthly time frame is still positive until proven otherwise, but the second is that we're yet to have a move away from the big monthly retest, right? So by that I mean kind of this area here, which encompasses 10.3, 10.7, and that's just essentially this structure here into this resistance. And then looking at the subsequent price action, we've essentially had break, retest, but where we are right now, not going to repeat too much because this was the theme of Friday, of course, but we haven't really moved away from this yet. And again, we're dealing with monthly levels and monthly retests, etc. So if a move does happen, we expect it to be visible on the monthly time frame or be seen as significant on the monthly time frame. And that generally suggests that we're talking about big moves, right? We haven't had that yet. Again, any other time frame, this would be totally reasonable. Close above, you got a couple of retest candles, and then you kind of get going eventually. That's fine on, say, the hourly, 15-minute, daily, or your intraday time frames, lower time frames, what have you. But of course, when it comes to the monthly, and each one of these seemingly compressed candlesticks is a whole month of trading, especially exacerbated by the fact that we sit here and watch these things 24/7. It's very easy to lose perspective, but that's kind of where we are now. Monthly support 10.3, 10.7. We got about the most bullish close that one could reasonably want on the most recent candle close, which was a spike of previous month's low into support and then closing above the upper boundary. You really can't kind of engineer using that, ironically, of course, a better close than that, and it's really the onus is on the bulls now to do something with it, because the scene is set and they couldn't really ask for better circumstances, right? So that's kind of the monthly time frame. The weekly reflects that in a very similar fashion, whereby we're dealing with a kind of retest area, however defined, let's say here. Right, the 10k level, is it 10.2, is it 10.5? You know that for me, this area is defined by the monthly and quarterly levels, 10.3 and 10.7. But however you want to delineate this area, lowest close, highest close, use the wicks, use the highest wick, use the highest close. We can go on all day, but it really doesn't matter. Everything falls into the same region, and that's unsurprisingly the weekly time frame reflects that retest we've had right now. What else is important on the weekly? I'm going to add essentially two more levels. One is this weekly highest close here, which is where the market is now, at resistance at around the 11.5 handle. You can see that this is pretty much the previous kind of level of resistance. It was old highs and lows in the past. The price action around it wasn't terribly helpful, or I should suppose easy is a better adjective to use. It wasn't terribly easy last time. We got this fake out, which resulted in a bearish engulfing bar, and now we'll come back to retest the same level again, right? So when we're talking about technical levels on this time frame, we are really dealing with some big boys, right? So it's the multi-monthly, quarterly, whatever, high time frame bullish retest level. In the left corner, whatever, 10.3, 10.7, but at the same time, it's not like there's no resistance on the chart. I think that's a spurious argument, at least under my system. For me, the 11.5, 11.6, we can get the exact levels in a second, that still shouldn't be ignored. And if anything, the fact that we're back here now kind of solidifies the case for it being resistance, because as we've explored before, when you have a level of resistance, then the market breaks above it, right? Let's say that's the break above it is this price action here. Oh, it's so much nicer doing all this with a mouse. You can't even believe. And then on the pullback, the market fails and closes below the level, usually in spectacularly bearish fashion, as we had in this weekly bearish outside bar. When the market, or if the market, I should say, pulls back to the level, it's once again at resistance. Not necessarily at the high, sort of the top made during the overthrow or deviation portion, but rather back at the original level of resistance itself, right? So you end up having a structure whereby you've got resistance, above it ends up being, with the benefit of hindsight, I say that, but it's really when the market fails to use it as support, that's when it's kind of confirmed as the fake out level, the fake out at the high, and then it restores its role as resistance once again. This pattern works inversely as well, as kind of support, broken support, and then reclaimed support. And I think that's really, if I were limited in my choices of levels or structures for a Bitcoin chart, these two would be pretty much it. And in terms of technical significance, I don't think it gets much greater than that. So the support, 10.3, 10.7, all the high time frames in the world. At the same time, resistance, not to be ignored. So this is just kind of comparing apples to apples. This is the resistance portion. This ends up being the fake out portion. And so accordingly, now we are back at resistance once again. So purely technically speaking, that gives us a really good range to work with. Are we exiting trending conditions? Potentially. Is there high time frame evidence of us exiting trending conditions right now? I mean, not from the available evidence, right? Just there's not enough price action. We just retested this level recently, so there's no kind of weekly close or daily close or anything really to work with to suggest that's the case. In this instance, I think at least a weekly close above this level is necessary to start building a reasonable case for a break through this range and acceptance higher. But until proven otherwise, we've got really good support, and now I presume really good, or at the very least significant resistance and range bound until proven otherwise. That said, it's always important to have some levels above and below market to deal with if we exit ranging conditions and start trending. One way that's often understated in my view in terms of how traders blow up is when they not necessarily fade a trend. I mean, that's quite an obvious one as to how to eat shit. But specifically, when you fail to recognize the shift from ranging conditions to trending conditions, especially when those conditions are informed or guided by higher time frames. Right? So normally you'd be fine selling lower time frame levels and having a more mean reverting strategy, playing bounces, etc. But at a certain time or at a certain point, if the market's going to start trending on a high time frame, all those lower time frames and less technically significant structures, which would be fine for shorter term trade ideas in the past, they suddenly start eating shit back to back to back to back, and suddenly your account is gone. Okay, so that's some context to be aware of. But in terms of levels above and below market, I think it's reasonably straightforward, at least for me. In terms of resistance, there's that 14k level, which falls, I think, essentially on this swing high here. And you can see it's an area of prior lows off to the left here as well. I think this is 13.8, roughly thereabouts as the first high time frame objective below market. Above market. In terms of below market, it's a tough one. I think purely kind of FTA perspective. If this red box, whatever, fails, we'll have to contend with the lowest close closer to about 8,600 or thereabouts. I'll put that in brackets because I think it's only fair if we have a monthly target above market for a breakout of the current range, right? I'm just going to label that current. Oops, I'm not doing that at all. Let's just say current range, right? Ooh, that's ugly. Current range. I think it's only fair if we're looking at monthly resistance above market as a kind of breakout objective. It's fair to be aware of monthly support if we trade lower and start trending downwards, which for me kind of falls around the Ducks' favorite 8k level or thereabouts. Okay, so kind of, I think a roadmap, this is totally reasonable. I've got some other things sprinkled on in between for shorter term trading, but hopefully you can kind of see where we're coming from with the monthly and weekly timeframes. So just to give it some, kind of recap, this level here, close to 14k, is the monthly range breakout objective to the upside, right? We're currently at resistance at 11.5, which is this highest close, comes into these lows, etc. So that's a big weekly level. It's extra significant because we had a fake out above it, and now we're retesting it as resistance again. So this is kind of the range high, right? Range high. In terms of support, I've taken the liberty of drawing a box here. You could be more surgical, you could be less surgical, doesn't really matter. It's kind of the mid 10k area, however defined, right? For me, it's 10.3, 10.7, made up of two high time frame levels. It could be something else for you, but we're just going to call that the range low. Okay, so as long as the market is constrained to some extent by these two levels on a high time frame closing basis, I'm just going to treat it as a range and buy support and sell resistance in one version or another. We have explored a reasonable objective for the market if the ranging conditions shift to trending conditions. Above market, the 14k. Below market, FTA, about 8,600. Pretty much this lowest close, which led to the break in market structure. So there's some significance there. But really, if this is a monthly level, we've got a monthly level in the form of kind of the 8k, 7,800 level as well. Okay, so that's kind of the best summary I can give someone who hasn't been following the stream to stream chronology, I suppose. This is our range, made up of a lot of high time frame levels. This is the upside target where I'd expect to move towards. This is the downside first trouble area if the range breaks down, with some consideration also given to this 7.8, 8k area. If that made any sense at all, leave a like on the video, but also feel free to ask me any questions and let me know how that's digesting so far. Credit's legit great at explaining his perspective. Good teacher, astronaut. Yeah, I need that many jobs because my trading is so bad. Teacher, astronaut, pizza delivery guy, plumber, Russian spy. Looking at the daily time frame in terms of current changes, it looks good from a lower time frame perspective, and the reason for that is, and this is kind of the idea and also just something we explored on stream as well as the newsletter, right? If we just take this consolidation in isolation in one form or another, right? You've got the range lows or the lower side or the lower quarter of the range closer to 11k, and then in some way you can add a range high type of structure on the opposite side closer to 12k, right? Something like this, support to resistance, and then a bit of a kind of fuzzy trouble area at the midpoint. I think that's technically quite nice. So for short-term trading or directional bias, we've smashed through, fairly straightforwardly, the bottom of the range. So I'd expect generally a move towards the top of the range, with somewhere in the middle being our midpoint or value area, whatever, to inform which side is going to get tagged. I'm not strictly trading these boxes. I might add my levels in the moment. You'll kind of see what I'm paying attention to, but it's quite clear that, if the market were really bearish, it will have proven so, in my opinion, at this level of resistance. But instead, then this is usually a telltale sign of something building up. You had a test of resistance, but that led to a lower high. Test of resistance, lower high. When you get that type of price action, yes, I mean, maybe 1 times out of 10, I'm pulling numbers out of my ass, this kind of bullish grind into resistance will end up in like a straight nuke candle like that. Sure, I mean, we have to consider those eventualities, but more often than not, market structure doesn't tend to be that deceptive on the higher time frames. So if you are expecting resistance and the market can only offer you higher lows coming into that level, that is certainly a reason for concern. And this consolidation, when it was broken to the upside in the first place, and certainly on the past couple of daily closes, reasonably clear that this was less likely to be a fake out, right? In my view, at least. Certainly, you'll know from a pattern that I'm a big fan of that the market doesn't tend to fake out at levels twice. So a good example is actually let me just take a different colored pen. The price action that kind of occurs at resistance, what you'll often see, and this kind of goes back to one of the diagrams that we spoke about earlier, when you have a level of resistance, the market breaks above it and closes above it, so you're thinking, right, broken resistance turned to support, happy days, fantastic. And instead, as we discussed, market comes back, takes a shit, and fails, right? So at that point, you're thinking, right, that's bearish, support, broken resistance failed to flip the support. This is now my invalidation, blah, 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 resistance back at the level itself. Yes, however, when the market rallies back into that level, that's where it really should be finding resistance, right? At the old level itself. If it doesn't do so, and it gets a close back above the level once again, this kind of price action, when it kind of closes back above the level and closer to the so-called fake out, this is typically bullish. Lightning doesn't strike twice, whatever convenient phrase fits your fancy. These double fake out patterns at a level are generally rare. And if it does make its way back above the original resistance, that's usually a sign of continuation, as opposed to close above, close below. Oh, that's bearish. Oh, it's closed above. Oh, it's going to close below again. It's going to be bearish again. It doesn't tend to be that way. Unless your level selection is really trashy, or it's just quite a rare occurrence. More often than not, if it's not at the original level that the market finds resistance, and instead pokes its way above it, that's a really good sign of continuation. And the simple way to interpret it is the fact that resistance, fake out, should have been resistance, but has turned to support again, right? Obviously, with the benefit of hindsight, blah, 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 I'm not going to pretend I traded this, caught this, tweeted this, put it in my private Telegram, Patreon, OnlyFans, but just from an educational point of view, that's something to be aware of at resistance structure. So we're approaching the fake out level. Resistance should hold. If it doesn't, that's a sign in itself, right? It goes back to the idea that the best bullish setups are bearish setups that fail a lot of the time, and the best bearish setups are bullish setups that fail, etc., yada, yada, yada. But let me see if any questions. Right, so adding some context in terms of where the market is for me right now, there are just a couple of points I want to make in terms of what I'm looking for. So you'll remember in the last live stream, we discussed doing business or finding turning points around where market structure is broken. And the basic conclusion we came to was something as follows. Price structure that precedes lower low is bearish, right? If market breaks above it, that's bullish, right? And then price structure that precedes higher high is bullish. If market breaks below it, that's bearish, right? You might want to screenshot that or whatever. Take a moment to... Ooh, that's quite cool. Oh, wow. That's it. This is the rest of the live stream, just me playing around with this. Anyway, this is something we talked about in terms of filtering for levels that make sense. So price structure that precedes lower low is bearish. If market structure breaks above it, bullish, and vice versa, right? And a couple of examples we talked about on this time frame was, for example, you remember we were using this highest close here for directional bias, in terms, at least in terms of short-term market structure, right? Because here's the highest close, here's support, and this was the high that led to a lower low, right? At least in terms of recent market structure. So it should have acted as resistance, and so for directional bias, if that gets flipped, that ends up being your kind of bullish argument for reversal. The level got tagged here, again, not pretending I traded it, etc., but just adding some context, what I'm about to discuss next. So, and I think there's also a very good example in ETH, but for our present Bitcoin purposes, like we are in an area of weekly resistance at 11.4, 11.5, and I think this daily level at basically 12k performs a very similar function if we don't get a pullback, right? So for bullish arguments, that's kind of where I'm leading to with this. There are two things I want to see if I'm going to buy dips, or one of two things at least, to actually get positioned, as opposed to just look at this and say, wow, green candle, good. The first, which is reasonably straightforward, is we've still got the monthly open and the quarterly support level at 10.3, 10.7, and we're also using that same market structure level, lowest close, highest close, before this leg down. Gets engulfed, makes a higher high, right? So if there's going to be higher low, where can I reasonably expect it? I mean, risk-reward wise, optimal, stars-aligned kind of bullshit is in this 10.7 area. So for me, any pullbacks into the confluence of important-y stuff we've got at 10.7, or just into this red box, more straightforwardly, is, I think, a good place for a dip if we get something substantial off of this weekly. So I wouldn't be keen to catch much in the interim. That may sound odd, given we've kind of flipped this red box here, but sometimes the market isn't always going to be easy to read. You will have two very nice / compelling technical structures reasonably close to each other, and you either have to break up your order, scale, do something, or essentially make a choice. For me, in those type of circumstances, I'll normally just opt for the level that's closer to invalidation, because I know that, you know, risk reward and validation is easier to identify at the level that's lower down if I'm buying a dip. But also I know if it does bounce earlier and trade higher, I've got another area to do business for momentum continuation longs, so I'm not too, you know, I don't really lose much by not FOMOing. So on the long side for Bitcoin, getting into more kind of trading plan territory, we're in an area of weekly resistance, so any pullbacks which are non-trivial, 10.7 is the area where I'd look to do business on the long side and play a bounce into, I mean, whatever, right? We'll kind of have to see what the market looks like and even what the price action within here is like. But the best I can do on these live streams, given I'm not sitting there trading for you, executing for you, managing for you, etc., I can just tell you my plans. Kind of, and again, this goes back to what is the use of these live streams in terms of discussing trades. In my view, if we're doing the kind of squiggly line, whatever bullshit, without being deceptive or any of that kind of stuff and giving you the what I think is reasonable and accurate, I think I can do two things. One is identify the types, you know, the specific areas / structures I want to trade. Two, identify the direction in which I want to trade them if they break and or do their job. And then the last two are more, so these are the main two, right? These are the main two. The tangential ones, which sometimes I'll be able to provide, sometimes not. Number three is the specific kind of target and or first trouble area for those trade ideas. Again, trade management is a huge thing. I won't just set orders and leave the market, but I can hopefully provide some context as to if an idea is valid, or I'm in a trade or have taken a position, whatever, where I think the next trouble area or sticky point for that position would be. And then number four, this is probably the most tentative one, but something I hope to do secondarily, so through examples and other timeframes, other instruments, or just going through past trades, ideas, or just price action, is talk about specific kind of entry techniques and what exactly I'd need to see, let's say here, to get involved in one of those positions. So again, when I discuss trades, main value, I hope, one way or another, is the structures I'm using, direction based on those structures, and then as bonuses, when and if appropriate, trouble area stuff, and then specific executional tips and tricks that I can hope to provide if the context is appropriate. Right? What you'll often get on crypto YouTube is they'll identify like really big levels and draw like a massive box and say, oh my god, this is like a do or die level, like right here. And then the market will kind of hit it and then completely fly through it. And they'll say, oh, look, we said that we were bullish above 11k and we closed at, 11.5 and then it went to fucking 13, so therefore we were right, our analysis was correct. Or they'll say this is a good support, and then the market will break support, and then the next YouTube update is like, oh my god, we said this was the key support, and look what happened as soon as the market broke it. It's just so useless, and it's the last thing I want to do is to betray your viewership by insulting your intelligence and giving you that type of so-called analysis or just fair weather reporting. So being humble about what I can offer or where the actual value is, structures, and directional plans. Everything else, I hope, comes up from time to time as an added bonus, and this has just turned into a smiley face. Okay? So going back to that, for dip buying off weekly resistance, the first area for me to do business is this 10.7 structure, this red box here. Okay, lowest close, highest close. I still think this old level that we've reclaimed is reasonable. There may even be a short-term bounce to be played off of that, and it's very likely, or I think still plausible, that we reach the red box without reaching where I want to trade. That's fine. Again, it's just the choice you have to make from time to time. What's the bullish plan if we just keep going, no pullback territory? Well, as we discussed probably about 10 minutes ago, given how long I've ranted, when the market sets a high, and then that high sets a, or some sort of price structure before market structure gets nuked to the downside, that high in itself ends up having some sort of significance as a level of resistance. So in that case, and again, all the supply zone, order block, range, all roads lead to Rome, so to speak. It's no surprise that these levels end up being aligned, right? Maybe supply demand zone guy will have this as an entire supply zone, and the range guy might have like, I don't know, something like this. It really doesn't matter. For me, I've just simply chosen the highest close of this level, and it's also significant because it preceded a crazy amount of really aggressive volatility, but also contextually, this was the lower high, which led to the low, which completely nuked market structure. So for me, that adds some extra weight as this, in terms of significance for this 11.920s area. So lo and behold, the bullish scenario at that level would be the kind of flip we essentially saw here, right? Just comes into the level, maybe a bit of a reaction, then closes above it, expecting continuation higher. Applying the same logic, this is probably the last good level of resistance anywhere near the top of the range. We've kind of cleared out the bottom of the range and are trading above it, right, with where we are now. The next obstacle is the top of the range, so if I get something like that, or some version of low time frame, well, no, not low time frame, sorry. Daily, maybe intraday strength, depending on how everything aligns, through 12k. I'll probably look to long that in some sort of fashion into those higher time frame objectives we talked about. Just saying that sentence now, given I didn't have a fantastic time longing 11.920s, I literally longed the top last time before this drop. Managed to get out not terribly, but hey-ho, learning my lesson. Just given that context, I'll probably this time wait for a daily close through the level, and if that means I get a worst entry, I'll probably take it either on a more shallow pullback to the level, or if it just breaks, I'll have to get involved in within the consolidation to trade it higher. But long story short, no pun intended, Bitcoin for me is currently at weekly resistance, or an area of weekly resistance at 11.4. If I want to play on, I'm not interested in fading it right now, unless I get something really good on lower time frames, but I don't think so, or at least I haven't looked. Nothing has jumped out at me so far. What are the bullish plans? Well, there's always one dip bullish plan and one momentum continuation bullish plan. And I generally recommend, and this is something I had to learn the hard way, if your system leans... look, I think you can build a profitable trading system that just does one of those two, but then you'll have to do it very well and across several time frames. But I think generally the versatility that is afforded to you by having a system that allows you to buy dips but also step in on momentum continuation, that I've just found that to be very valuable in my own trading development, right? Especially trading high volatile, trending, whatever crypto assets. If you're always waiting for the dip, you might eventually get your 30% whatever crypto style correction, but at that point you may have missed out on like, you know, much easier trend following trades. So yes, you do get your dip eventually, but the question is how many easier trades have you missed out on between the rally and then the dip until, you know, the one that you can actually trade. Hope that makes sense. So resistance, deep dip plan into blue box to something like this, right? Look to do business ideally at the extreme, closer to whatever, 10.7, 10.6. The bullish continuation one, I've delineated the highest close. It's important because it's the highest close before big nuke, which broke market structure. So a daily close above that level would be, I'd look to get long. You know, is it going to be a pullback? Is it going to be a consolidation into a continuation? Is it going to pull back to the level and then reclaim it and give me something risk defined? I have no bloody idea, right? But at least you know the direction and kind of the context, etc., etc. And stuff like this is why I'm so reluctant to just, you know, draw the squiggly lines or do whatever, because as I exercise more discretion, no two entries are the same. Sure, they share patterns, some are more risk defined than others, etc., but I can never predict exactly how price is going to work out at a level. But long story short, dip into here, trouble area, I mean, whatever, maybe back to the 11k level, or if things get really sticky, it would be a kind of from 10.7 to 11k. I hope that doesn't happen, because if this holds, it should be able to break that level reasonably effortlessly. From here, if I get my 12k continuation long without buying the top this time, target one will be the swing high, but from there I really expect us to clear out this range as a whole and start trending higher if this idea is going to be correct, towards probably round numbers, so 13k. Does that make sense so far? Also, 123 likes. Thank you so much for clicking those buttons. I'm very grateful for your support. Let me just see on the intraday timeframes if there's anything. Yeah, just to add some light on the intraday timeframes, I'll make 2 points, I think. Right. Point number one is that in order for the high time frame picture to continue being bullish, from a kind of straight up momentum continuation position, that, you know, the pullback end up looking like this, right? If we're going to get some sort of continuation in an aggressive, or a continuation that results in this kind of aggressive environment, I think it's imperative that the 11.5k level holds to continue this sort of stair-stepping type of trend high. I think that's less likely, just given the context. The reason I say that is what I'll often notice in price is that when it gets above, so look at the levels that actually matter, right? So this level matters. And then on my chart, at the very least, again, my chart isn't perfect. It's not canonical in any way, but it's something. What else can I use to inform my own decisions, right? So for me, looking at this intraday price action, what levels matter? This matters a lot. Oh my God, why are my stars so bad? Hold on, we can do better than that. This is really important. Okay, that's somewhat better. This level matters, and then just even looking at the y-axis, right? Or just up and down, where is the next level that would really matter if we're coming off of monthly, quarterly levels, right? For me, there's kind of not really much going on until we've now reached weekly level here. Okay, so everything in between, yes, there are kind of valid technical structures, etc. But if we're talking high time frame, you know, level to level, there's just really a lot of fluff between A and B. So what I'll often notice, and I'm yet to develop a really good set of strategies amongst, you know, which allow me to take advantage of this, but purely observationally, when price breaks one such level that's really important, you get really easy continuation trades all the way up to the next important level, but then the continuation trades more often than not end up being really difficult or like a trap, right? So what, I suppose the colloquial version of that would be like, this level's huge, right? 10.7, whatever. I'm going to even draw it as a red box, right? Resistance, and then let's say you get this Chadicus Maximus candle here. That level is smashed. and then you get some extra source in the form of trendline support at the level. But most importantly, when this price action is taking place, we are now above the most significant technical level in that kind of area / range. So when we're within here, the next question is, where is the market more likely to trade to? Or where is the next magnet for price kind of working backwards? And again, that doesn't just mean the next resistance level on the chart. I think in my view, or at least in my system, you have to give some consideration to timeframes. So if we've just broken monthly, quarterly, significant stuff, are we going to stumble over every single 15-minute, hourly, 4-hour level of resistance? Probably not, right? If we're breaking monthly, quarterly stuff, it's reasonable to expect the next magnet for price to be at least kind of daily, weekly, maybe monthly structure, right? So what will often happen when you get these types of events, the market will just literally stair step towards the next weekly level. So the continuation trades that happen between high time frame, between breaking one important level and before reaching the other, that kind of empty space, as you can just see by how much space is between the levels on my chart, that empty space is often very reasonably filled by either just a straight line move or some version of a straight line move which offers just an easy continuation entry. However, when that environment ends up reaching that next level, that's where you get the trap, right? So a good example of that could potentially be something like this, if I had to draw a diagram of it. So let's say this is high time frame level 1, this is high time frame level 2, okay? The market comes into it, resistance, and then it's broken, and you know, closes above it. So at that point, we're above a really important level. And where's the next magnet for price? I mean, yeah, there's probably some sort of intraday, lower time frame stuff in the middle, but the next big magnet is here. Maybe a way to conceptualize that is that this is a weekly level, right? This is a weekly level, and then you've got kind of H1 to H4 stuff in the middle. Is it going to provide some resistance, maybe slow things down, bounce price, consolidate, do whatever? Probably. Is it going to stop the market if this is a real move from weekly to weekly? Is this going to be able to stop this? Less likely, right? Or it's less probable. It's what we're dealing with here. Probabilities, right? So what does that mean when the price or when the market closes above this level here? What you'll often get is something like this. Now, this is a very crude depiction, so bear with me, but it'll hopefully get the point across, right? So it breaks above. Yeah. So then you consolidate. Consolidation traders make money. Consolidation traders make money. Or continuation traders make money. Pennant, flag, continuation traders make money. Oh my god, this is the easiest trend in the world. Continuation traders make money. And this is all kind of its own low time frame trend, right? However, then when you get the final pennant, it's like, oh, well, this is the same thing, right? The price action going on here, this triangle is the same as this one, this flag, this flag, this flag, this flag, this flag. However, what they don't notice, the traders on board this lower time frame trend within the macro move, is that probability is now against them. When the market got above this level and before reaching the next high time frame level, continuation was super high probability and straightforward. However, if you're only focused on like this micro or lower time frame trend in itself, and you're not considering the consequences, you'll get this often the same setup, like the same triangle, flag, pennant, whatever, occurring at the level. Except, you know, the same guys who've been making money here, 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 here. It's not often that straightforward. There's like usually 2 or 3 continuation legs between high time frame levels. I'm just pulled that number out of my butt. That's quite anecdotal, but you know, it's obviously not 6 or however many there are here. But the point is, that trend is easy until it hits high time frame resistance, and then that's where you get some sort of stickiness and some sort of candle that wipes out a lot of the trailed stops that were established or accumulated on the way up. Okay, so I suppose the summary version of that is continuation trades are high probability when the market is moving in the empty space between one high time frame level and the next high time frame magnet above or below it. And in that type of environment, during these legs, you know, probability favors continuation. However, when the objective of the level to level move is reached, probability no longer favors continuation, and it's at least even, if not favoring reversal, given that the easy ride is over, right? The easy ride is over, and we've now moved from support to resistance. The kind of air bubble is filled, if you will, and now it's time to kind of reconsider. So if you end up being way too myopic and focusing all your efforts onto the lower time frame trend, you may miss out on the higher time frame context, which ends up often being the precursor for some sort of reversal. Did that make sense to anyone at all? I suppose the long story short is be aware of where the market is and whether the higher time frames are suggesting continuation or reversal. I know that sounds so vague, but like you just kind of gotta know where you are. So just applying that to the chart example, like we know that 10.7. I mean, we even discussed this on stream, right? Not claiming clout, etc. Just as reference points, that 10.7 is a big level, and then the next one, and again, these charts don't really change from stream to stream. Sometimes I'll add a box and do all that type of stuff. But whatever. So the straightforward move was A. If A breaks, there'll be a move towards B. And in this area, which occupies A towards B, that's where, within it, that's where continuation trades are higher probability. Are they as higher probability when price reaches B or pokes above it? I think the chances of a successful or easy continuation trade fall off significantly. That's the only point I'm making there. Stathy says, a lot of live streams are pre-recorded or just play a radio station. Well, given that I'm reading your question, I would find that not to be the most plausible explanation of events, but maybe my predictive skills are such that I can predict who you are, what you're going to say, whatever, it doesn't matter. None of the streams are pre-recorded. Yeah, 5 a.m. sums it up nicely. Trade those trends between high time frame magnets, certainly. And again, I wish I had a system which allowed me, or which was really well developed to take advantage of that, but I'm kind of working on it. It hasn't been great. I only really notice far too late to take advantage. Like here, I was really kind of itching for a long trigger, but I kind of started doubting myself because of trading from a laptop, blah, blah, blah. Long story short, no one cares. Yeah. Cornholio says the best high time frame risk reward now is short. Why don't you take it? I agree. It's in this area that there's the best. Or again, yeah. I mean, look, in terms of structure, I probably wouldn't be fading all the way at 12. In terms of where the market is right now, weekly resistance, and going back to the weekly roadmap, I agree that this is sort of the bears' last stand. Last stand. That's not English. It's the last area for bears to really step in if they're gonna do so or bother doing so. I don't have an entry trigger here. Like, for example, would I just sell this and put a stop like somewhere above the high? That's not typically how I'd position, even if I share your convictions or favor the risk reward, right? For me personally, if I were to sell or get involved in the idea of 11.4 holding resistance, I'd need to see something like this, going back to what we studied or discussed earlier in the live stream about highs leading to lower lows and lows leading to higher highs. We can kind of reverse engineer that, right? Looking within this consolidation, where was the break in market structure, right? We're kind of making equal lows or slightly higher lows here, and this leg was the one that broke market structure. So then we kind of work backwards and say, where was the lowest close and highest close, or the box, the range, the structure, which preceded this break in market structure? And for me, that's this here. That's kind of the nearest support or intraday support in this market. So if we're going to get some sort of bullish close at or around 11.4 on the weekly, I would expect, to be honest, this area to get tagged and then some sort of settlement closer to the level itself. So accordingly, if I wanted to sell this on any kind of intraday basis, I'd need the red box to fail. So that might look something like maybe a final overextension, some sort of consolidation at the level. All of that doesn't matter. That's just kind of speculative. If I were to sell this, just on paper, again, context can change everything, blah, blah, blah. This is support. If that were to fail, I'd probably look to sell it into this consolidation and then into the trend line if we're going there. Okay, so to answer your question, is this kind of weekly best risk reward resistance to sell? I mean, if our weekly roadmap is correct, I'd agree with you. Yeah, it probably is, because on the weekly time frame, there's really no other level to sell except this one. But I can't just blindly mark it in and wait for something to happen and set a stop just somewhere. Generally, not how I do things. I'd need to see either something develop in the coming hours and days to suggest a breakdown, or for more concretely for support to break in the form of this engulfed breakdown structure, whatever you want to call it. Again, the order block guys will call this a breaker. Its supply demand guys will call it a engulfed supply zone. Like, it's all the same stuff, right? It's just it's a structure that formed before a shift in market structure. Should be good resistance, failed to do its job, so expecting some sort of support if we pull back there. Okay. I think that's kind of it for Bitcoin. Yeah. I think it's unlikely that I get something in the short term, like in the next day or so. But I would like to... I'm going to actually add this for the next live stream so we can have this structure. The pre-breakdown consolidation. Let's just add that and make it visible on... Here we are. Okay, so this is a kind of shorter term or lower time frame directional bias level here. And there could even be a quick setup which simply takes me from A to B and then maybe hold some on if it's going to trade higher. Again, I wish I could live in a world where I were to give you every single plausible scenario and one of them happens and we all look very clever, but unfortunately that's not how I trade and not how trading works generally, in my view. That's Bitcoin. Looks good for now, right? And purely in terms of technicals, right? We're in a consolidation, break higher, consolidation, break higher, consolidation, break higher. But for me, I'm slightly more cautious than in these preceding examples. I think they can be distinguished by the fact that they were happening kind of in the middle of nowhere, whereas this breakout contextually is happening at weekly resistance. I hope that argument makes sense. If it doesn't, let me know. I can try to clarify. ETH. This is the interesting observation about ETH, is that structurally, it still looks worse than Bitcoin. But even on this rally, I believe it outperformed. I mean, because ETH bounced quite a bit. Right. That's interesting to me. I'm not deriving any strong signals from that per se, but it's certainly interesting to observe. For me, ETH has got to prove itself, right? And that's because the monthly close was really kind of rough on this instrument, whereby we had a fantastic level, basically around the 400 handle, and then we got one of the most bearish closes at the level that you could get, right? You got a monthly close above, yay, bull signal, etc. And then the next month spiked previous month's high and then closed below the level of resistance. So it's a slightly less straightforward version of what we talked about here, right? You get resistance, you get a close above the level, happy days, and then the market pulls back and closes below it. And so once again, you have resistance at the level itself with the price action above being the sort of overthrow deviation fake out. So that kind of applies to ETH. The red is the resistance level, right? Resistance. We had this price action close above, close below, the sort of fake out. And for now, we're retesting it as resistance once again. So monthly close, certainly a lot to be overcome. The weekly paints a very similar picture. Slightly more positive now, but I mean, given the monthly context, still some obstacles to overcome. Specifically, here we are, kind of lowest close before this leg up, and again, it's all around the 400 handle. I don't think being too surgical is important here. This is that same area which we had the close above, close below, or failed support resistance slip on the monthly time frame. You can see that on the weekly. Resistance, close above, looks really bullish, etc. And then you get this complete nuke wipe candle, which destroys the rage completely, back to being resistance, and it's now being retested. So until I get, very conservatively, something like so, right? Or specifically above the upper boundary, or being more conservative, just reclaim the whole range itself. Until one of those happens, this is a bearish retest for me until proven otherwise, right? And we can now superimpose those levels we talked about on the monthly and the weekly time frame to the chart itself, and kind of see where we've ended up. So the top is the monthly level, the bottom of the weekly level as labeled, and then we've got the top of the range here on the weekly. So we also discussed how I wouldn't be a fan of selling the lower boundary, simply because any kind of squeeze or spike would very likely roll through that level, as it has. For me, if I'm going to sell ETH, it's going to be at the extreme of the upper boundary, sort of through the 400 handle as these prior highs get taken. I think in terms of as close as you can to invalidation and where the idea is most quickly going to be proven or disproven, any bearishness hinges on 394 or 400 acting as resistance, so that's where I'd want to step in on this upper boundary, ideally with these highs getting wiped. That would make sense to me, and then first trouble areas kind of be level by level. Lower boundary, the early puke at 378, the weekly level, and then we can kind of work down if appropriate. The bullish case is, as we discussed earlier, where the best bullish setups are fantastic, bearish setups failing. If this monthly bearish retest doesn't play out, then I'll certainly be keen to get on board any strength through the 400 handle and take it to the top of the range at 433, the high as the kind of next objective. But really, I don't think there's much resistance there. If we get through 430s, I really think Chadicus Maximus to the upside at that point, and we can start re-entertaining some of those 600, mid 500s, 600, 700, whatever dollar targets. But for now, monthly close is still bearish. Weekly is rallying, but into an area that I've still got as resistance given the monthly close. Long story short, anything which isn't a fantastically strong reclaim of 400, I'm not gonna buy and will interpret as a bearish retest. Okay, I think that's about the only take I have for ETH. Yeah, I think that's it. Let me make sure I'm not missing anything. No, that's reasonably straightforward. With where the market is right now, I suppose we could also add a similar type of box or breakdown level, which is this one here. Just as some extra confluence around the weekly 378. And we'll see if it does anything or not. Yeah, that's ETH. That's ETH. So we're in a bit of a peculiar situation. Monthly on Bitcoin is really good. Weekly is at the top of the range, kind of extreme resistance, but yeah, I mean, look, until proven otherwise, as we discussed, we've got a ton of support at mid 10, 10.7, whatever, and then the last real level of high time frame resistance at 11.4, and I'm going to presume range bound until proven otherwise, and I'm certainly waiting to be proven otherwise, because as we had Gainsey explain, and Jules in a very similar way, it's really the trending environments where you're less likely to get hunted, and you can really get those risk-defined setups, so I'd be a fan of that. But I think I certainly need more evidence on the high time frames to suggest that we're breaking from the weekly range, right? Just as a quick reminder, the levels we delineated for the weekly range were as follows, very roughly. Resistance in the form of the highest close here, which is kind of the 11.5 level, and then support one way or another in the around the 10k handle. Support in the range, resistance in the range. Above market, we have, this is our objective, a break from the trending environment into 14k, and a break down from the trending environment into mid 8s as the first trouble area, but then more likely than not, if this, given the importance of the mid 10k handle, probably we'll have to trade lower to account for that. Okay, this is, if there's one thing to take away, I think it'd be this chart generally, but that's Bitcoin. ETH, monthly is not good given the fake out that happened at the level. And for me, retests of 400 until we get some high time frame closes through it are retests of resistance. I still wouldn't want to do business close to this level, because I think if we spike or continue squeezing into the 400 handle, there's a really good chance that these highs don't just get kind of tapped or spiked a little bit. I would expect some non-trivial overextension in terms of price before then resolving and maybe giving weight to the idea of that being the high time frame kind of monthly bearish retest. So it's not like when I say, bearish retest at 394, 400 or whatever, that by no means means I've got limit orders at the level, simply because if this thing doubles up or in the next few days really start to push up, we are dealing with a monthly level here, so there's no kind of urgency for price to kind of tap the level and go. It might do so on a lower time frame, certainly, and I'll look to trade that as well if appropriate. As you'll remember, my system essentially does high time frame level in both cases, right? High time frame to high time frame, but then one of them is a trade to low time frame FTA, and that's a day trade typically, and then the other one is a trade to high time frame FTA, and that is a swing trade typically. Okay, so if we get our overextension into 400, especially early on, in the next few days or so, there's a good chance that I'll get setup number one, where I just hit play a hit and run setup from the high time frame level into some lower time frame trouble area. But often it takes longer for setup number two to form. Certainly if we're dealing with monthly levels, it could take kind of weeks or several days for price to hit the high time frame level, low time frame FTA, come back, retest, do whatever, before then giving the trending move. Okay, and that was kind of the whole impetus for creating or working on the first set of setups. If you purely swing trade high time frame levels, you're just not getting enough trades to... I think the trade frequency is too low. That's how I'd classify it. If you are really honest and really strict, and the number of markets you trade isn't that high, and you purely trade high time frame swings, then your trade frequency is just too low to be useful, either from an income perspective or just from a data collection perspective or trading experience perspective. It's not good enough. And the way I've kind of worked around that, instead of going for 1 million markets, I essentially do this, where I'll still trade the same levels, but some setups I take to low time frame and they inform my shorter term trading, and at other times, at the same levels, I'll take them to high time frame targets, and by definition, those end up being swing trades. Does that make sense? Hope it does. It's kind of what I do, so makes sense to me at least. That's kind of good enough. Danny asks a very difficult question, but one I enjoy, which is how much discretion do you give to time frame closes? For example, Bitcoin, will you accept a 4-5 daily closes above 11.4 resistance as confirmation on a weekly move higher, or prefer to wait for hard 1 week confirmation? You're going to hate this answer because it ties in both my kind of academic background as well as my trading answer, and the answer is it depends. I will be slightly more useful than that. I generally don't have such a strict classification system of, okay, it's a weekly level, I need a minimum of X number of daily closes until I'm going to assume it's going to flip on the weekly and then maybe catch a trend early. For the most part, I'll jump one time frame down if I'm being aggressive. So if it's a weekly level, I want at least one daily close, but then that's not it. I'll then also monitor it on intraday timeframes to see if it's actually acting as support or not. So in terms of, instead of using closes as kind of canonical bits of information, it closed, therefore X. I use them to provide context and provide information that, we've got the daily close above the weekly level. It's now more likely to be support, but I'm always going to reevaluate that claim and reassess the evidence based on those lower time frames. I hope that makes some sense. Jose, unfortunately, there is not a Discord server for the community, but LoomDart has a bottom shorters Discord server. I guess I hang around there from time to time. But yeah, we don't have a Technical Roundup Discord channel. Not sure if it would be the best idea. What significance do you give volume? I don't really. I don't think it's invalid. It just doesn't play a role in my system in its current form. So I think final one I want to talk about. I mean, ETH BTC still looks fine. As we discussed, this rally, even though ETH on a higher time frame looks worse than Bitcoin, this rally, ETH still outperformed in this rally. To be bullish ETH BTC, we got a bounce from this level again, which is nice. But for continuation towards the top of the range, my kind of trouble area I've got in my head is this candle here, right? So something like that would probably suggest a move higher for ETH BTC. God knows what the market would need to look like at that time for that to materialize. But for now, the kind of bigger picture for ETH BTC is the main structures, the main levels are still being respected. So not going to assume any big rebalancing, reallocation, or diverging trending environments between Ethereum and Bitcoin until that resolves one way or another. In terms of link, I don't know where all my levels have gone for the daily chart. That is somewhat upsetting. But I think for the BTC chart, there's a really nice pre-highest high range sort of to deal with here in the form of this support resistance flip consolidation, whatever thingy. We've got a short-term break in market structure to some anyway, kind of above this level and above these highs. So something like that, I think, wouldn't be too unreasonable. I always like when the high leads to a lower low that then gets reclaimed, as we talked about. Like when the high shifts market structure. In this case, it didn't really, because you kind of formed a higher low, which is kind of bullish in itself. But in terms of giving significance to levels, I always prefer doing business around the market structure shift. This is fine. For me, the more straightforward trade would be a real kind of link resurgence continuation on something like so. Above the grey box. That would make sense to me. But looks fine in the short term as well, given we're above resistance at 10.5. For Link BTC, I've currently got it at resistance. Not sure why it's anchored to the candle here. And in a very similar vein, I'd rather see a reclaim of the old range. And then I think the trades will be easier from that point. So at resistance, right, I think this is easier. This is probably easiest if you are a bull. A link bull. This structure here. This structure here. Okay. YFI is always an interesting one. Hasn't done much, but I think these levels are... I'm literally only going to use these. And I've spoken to kind of Hisaka and a couple of other people. Loom Dart. It's apparently a fantastic instrument to scalp. Kind of how Link was not too long ago. So for me, highest close, support. Lowest close, support as well. And then kind of... Here we are, the big reclaim level, range low, range high within that same consolidation. So strategy-wise, reclaim of this, I'll look to get long towards the top of the range. Wow, that was very neat, given it's just a line thing. Anyway, that would make... Oh, I've just fucked it. There we go. That would make sense to me from a reclaim range low, right, into the top of the range. Or alternatively, given how little time was actually spent at this support, the kind of quick wick close above, and now it's sort of not exactly moving north. In terms of do or die, risk reward, now or never scenario, that's always going to happen at the extremes, and the extreme of support is, as you can imagine, at the lower boundary. So something like this, anything that gives me risk definition, or a real effort or exertion to break support, which fails and springs higher, I think that would certainly skew risk reward to a point where I'd want to take it at least towards the top of the range as the first trouble area. But that's, as I said, do or die levels. Probability-wise, often end up being quite good if your levels are fine. But it's really in terms of risk-reward where they shine. So that. But with where it is right now, don't really care. Kind of going back full circle to our Bitcoin thing. There's a dip long strategy, and then there's a momentum long strategy. The dip one would be the extreme of support around 12k, I think that is, right? And then the momentum one would be through 23k. And that's all we've got time for this week. I hope you've enjoyed this Monday markets bit of technical roundup. I'm sure I've tried to exert or create some replay value, so make sure to go back and revisit any relevant boxes, charts, roadmaps that you might want to have for the week to come. Thank you to Bybit, as ever, for sponsoring Technical Roundup, the YouTube channel, the newsletter, all that fun stuff. Newsletter comes out tomorrow, in fact, so it's free. Make sure to go and sign up if you haven't already. We'll have some fun stuff there, as always. And now that I'm back home, as always, as well, thank you to my sister. Big shout out for providing me with internet. But now that I'm back at the battle station, there will be more videos, more updates, and more content on the Technical Roundup channel as well. So like the video if you haven't already. We are so close to 200. That would be a fantastic parting gift and a way to start the week on Monday. All your support is very much appreciated. Hope you've had a fantastic weekend, and I will see you in text format in the newsletter, and then on Casual Friday, I think we've got Loom Dart coming. Maybe we should play Among Us or do markets. I don't know. We'll have to we'll have to decide. Take care, everyone. Hope you learned something. DMs open, etc., etc. I'll see you for the next one. Bye-bye.